What is going on, everyone? Welcome back to Neel K Trades or Neel K Trading. Today we have another educational video. This is one of the last ones in the series. This is inverse fair value gaps. Don't want to waste too much time. If you haven't already seen my video on fair value gaps, I'd recommend looking at that first before coming on to this video, otherwise you're gonna have no idea. I will be doing a short recap on fair value gaps, so let's just get started. But if I would watch the previous video, otherwise you're not going to understand what I'm talking about here. So jumping right into it, this is a little drawing I had done on my fair value gap video. As you can see, all fair value gaps are price imbalances. You'll have a sharp leg up. You'll see a fair value gap get created. I explained all of this in my fair value gap video. So you'll see price disperse out, you'll see a gap get created. That gap will get used to fill orders before keep moving up in its original direction. The same way on a dump, you'll get an imbalance. You'll have orders get filled in that region before having a sharp move back down. Now, what exactly is a inverse fair value gap? So all it pretty much is a fair value gap that gets created, and instead of price getting filled here before moving back down, the fair value gap gets disrespected and you see price closes outside of it, creating an inverse. The same way, you see this leg up, you see price come into it, order should get filled here and move sideways before making a move back up. In this case, you get the down close candle closing outside of it, creating an inverse fair value gap. So here's just another look at it. It's usually, so what you'll usually see is a fair value gap get created. So you see there's the low of this wick and the high of this wick. They do not cross, they do not touch, creating that imbalance or that gap. So ideally, if you're trading just a normal fair value gap, price will come into it, price will move sideways before moving back down. In this case, you'll see that price actually came into it and had a sharp up close candle here, disrespecting this fair value gap, creating an inverse. So what you can expect to happen after that is now price comes down into this fair value gap, or the inverse fair value gap, fills orders, and then moves back up in its original direction. So this is one of the main confluences I use when trading, and let's just jump into some examples. So I want to keep it rather simple when starting off. So I'm going to show you the 5-minute chart. So very clear to see here, there is this fair value gap. So what you can expect to happen if you're going to make a move lower, so you'll see price will come up into it, orders will get filled, and usually you'll start to move back down. Now, in this case, you can see price did come down, retested it, and had a close outside of it, came back down into it, and moved higher. So it's not really that much different than a fair value gap. It's just all I really want to emphasize here is that this gap gets created, it gets disrespected with the closure outside of it, price retests it and moves higher. Now that is for a long. Now I want to show you an example for when you're going short. So as you can see here, we have this gap. So this is on my trading journal, that's why I try to zoom in a little more. As you can see, price created this imbalance, we came back into it, closed outside of it, retested it, and as you can see, price did come up back into this fair value gap, now inverse fair value gap, but notice how it didn't close outside of it at all. If it closed outside of it, that's a good indication that your trade is going to fail, but in this case we didn't get a single close outside of it, and you can tell price moved right back down, got the change in state of delivery. If you haven't seen my change in state of delivery video either, I would recommend you go watch that, as all of these concepts will help you become a better trader when trading my model. So price got the change in state of delivery and had continuation all the way down. As you can see, this trade hit full take profit. Now moving into the third example, as you can see here, we have this fair value gap. What ends up happening? Price closes outside of it after creating the gap. So you can mark this out as an inverse. And if you take a look at how price is moving after that, well, we do get the closure outside of it, and we do come back up into that fair value gap to test it and fill more orders. You can see price did not close outside of it once. While we did get wicks outside of it, we did not close outside of it once. And you can see after this candle, price dumped back down. We got a change in state of delivery on this candle. So this was the most recent low that was created with red candles. You could mark out this as your change in state of delivery as well, but I like to look at the major one before making the next move down. So you have this one here as well. And price dumped all the way back down to what? We have these equal lows here. As you can see, they're identical. These wicks are the exact same level. And what does price do? Price comes down into those equal lows. If you had taken this trade, that would have been upwards of $2,000 off of one contract, just one contract. So I use these in tandem with liquidity, which I'll throw all the concepts together in one video and explain all of that in the coming week. Now moving into the third example, I want to show you what I would be thinking if I were to take this trade. So as you can see, we have this data wick. So this was the market open 9:30 a.m. candle. As you can see, we created that low on that 9:30 a.m. candle. This I can indicate to be liquidity. I can consider that liquidity. Any low that created at market open is liquidity. Same way, the high that was created at market open can also be a draw on liquidity. So what do we see happen here? We see this gap get created, price dumps, and as you can see, price retests it. We get the closure outside of it. Price decides to retest it before moving higher to this liquidity. Not only that, we have these highs from the previous day, right before market close. We have these highs, these equal highs here. And what does price do? Price goes up to equal highs before moving a little bit back down. So if you did take that trade just to market open, 34 points, that is a respectable $650. And if you were to take it all the way up to equal highs from the previous day, that would have been also around $2.3 thousand off of one contract. So this is a continuation of my fair value gap video. There's really not much to it. I'd say the main thing you want to look out for, and you'll see me say this in my video, you want to see how the middle line of the inverse gets treated. So if you see that you get an inverse and price dumps back down and it stays in the bottom half of this, then it's likely to fail and go to your stop loss. Whereas in here, you can see price gets the close out, retests it, but doesn't go lower than the medium threshold or the consequent encroachment, and price continues to move upward to these equal highs. Again, in this example, as you can see, price did close above the medium threshold here, but that was a risk I was willing to take. You see this large wick here get created and came right back down, showing strength in this inverse. Now, if you want to be if you want to lower risk as much as possible, if you think a trade's going to fail, then I would consider exiting the second that your inverse fair value gaps gets disrespected and closed outside of. So if this were to close outside, it's a good point where you can go ahead and exit your trade because price is likely to move back in that direction. So I do want to keep this video rather short because it is a continuation of fair value gaps. If you want more examples, I would go look at my trade recaps because a lot of what I do in my model, I present and show inverse fair value gaps. So if you want more examples, I would look there. I also really recommend T Trades. He is very technical. He knows in and inside out everything about ICT trading. I'd also look at Dodgy's DD. He is the main guy that I follow. I would consider him to be my mentor. I follow all of his videos. I've been following him for well over a year now. He's a great guy, very honest, very transparent. He's like 2 years older than me, 3 years older than me. Drives a Lambo. He is someone that I look up to. He's not that much older than me, and he trades the same model. So if you're interested in that, definitely check out Dodgy. He's a great guy. PB trading as well. Someone asked me in my previous video, or one of my previous videos, if I'm with PB. No, I just really like their style of content, how they present themselves. Very goofy and very profitable. That is the big part. You can be goofy, but if you're not profitable, then what are you doing? You're just wasting time. But overall, I would check them out if you guys are interested. Just a little update. I am also going to be making a video on how to get started with funded accounts, how you can pass one in the shortest amount of time, with an example of an account that I passed in approximately 1 week. So if you can pass an account in a week, I consider that to be very good and can show that you are a consistent, profitable trader. And if you can carry that out on your funded account, you're going to be ahead of 99% of people. I'll also pull up a statistic in that video. I think it's like 90% of people who open a combine, or no, I forgot the statistic, but people who pass the combine and make it to the funded stage, I think like 30% of those people end up getting a payout, and of those percentage, only 12% end up getting moved up to live, something like that. And I will show you guys how you can beat the odds, beat the percentage, and how to just have an edge against everyone else in the market. That is what makes you profitable. It is your edge. It is what separates you from the majority and what makes you different. So thank you all for watching this video. I'm going to wrap it up here. If you enjoyed, leave a like, subscribe, share with your friends. I really appreciate all the content, or all the views and all the support I've been getting lately. I really appreciate it. It shows me that I'm not just talking to myself, and I'm actually talking to an audience of people who have questions, who are interested in this, and really want to better their lives. So thank you guys so much for watching, and as always, be patient, be humble, take care.